Assalamualaikum warahmatullahi wabarakatuh and a very good day. This presentation is about rubber industry, financial positions and performance of FGV Holding Berhad, Comfort Gloves Berhad and KOSSAN Rubber Industry Berhad. This is our group members, Syadatul Ashikin, Siti Nur Fatihah and Zawani Syafiqah. The content of this presentation. The first topic is about introductions of ratio analysis. The second part of this presentation is company's background and board of directors. Next part are the 5 financial analysis ratio, which are liquidity ratio, leverage ratio, activity ratios, profitability ratios, and market ratios. The last part of this presentation is conclusion. First of all, we are going to look into the introductions of ratio analysis. By analyzing financial statements like balance sheets and income statements, ratio analysis is a mathematical method for gaining insight into a company's liquidity, operational efficiency, and also profitability. So the foundations of basic equity research is ratio analysis. By carefully analyzing historical performance and financial statements, investors and analysts can assess and comprehend an organization's financial health with the use of the ratio analysis tools. So ratio analysis also has many benefits. So one of the benefit is that when we compare multiple companies, it will provide financial data users with insightful information about business performance.
FGV Holding Berhad, formerly known as Filter Global Ventures Holding Berhad, is one of Malaysia's leading agribusiness company and the world's largest producer of crude palm oil (CPO). With an initial capital of 10 million, FGV was established on 1st July 1956 under the Land Development Ordinance, now the Land Development Act. Among the objectives of the FGV company is to eradicate poverty by developing land through the creation of cash crop. As this objective from 1957 to 1990, FGV settled 112 635 families. FGV was also listed on the main market of Bursa Malaysia Security Berhad in 2012. So profile of director FGV Holding is first Tan Sri Rasta Muhammad Isa, 72, male, is a chairman, non-independent, non-executive. Second, Group Chief Executive Officer CEO of FGV Holding Berhad is Datuk Muhammad Nazrul Izzah Mansur, 48, male. And third, Datuk Shahrul Anwar Sarman, 51, as non-independent, non-executive director, and Group Chief Financial Officer (CFO) is Datuk Muhammad Hairul bin Abdul Hamid, 53, male.
Okay, next you're going to look into Comfort Gloves Berhad company background. Comfort Glove Berhad is a Malaysian-based investment holding company which engage in the manufacture and trading of natural and synthetic, especially in examinations of gloves. So the company operates through 4 segments: manufacturing, investment holding, trading, and others. So the manufacturing segment is engaged in the manufacturing and trading of the latex gloves. The investment holding is involved in the investment and also provisions of management services. And the trading segment involved in the tradings of latex gloves. The gloves from the Comfort Gloves Berhad are exported to throughout the world, such as in Northern American, Oceanic countries, Middle East, Europe, South America, Africa, and also Asia Pacific region. This company also have two production plants which at Simpang and Matang, Taiping. Apart from that, it has a subsidiary company called Comfort Rubber Gloves Industries, which was founded in 1993, which engaged in the manufacturing and trading of latex gloves. There are four board of directors of Comfort Gloves BERHAD. The current executive chairman is Tan Sri Datuk Lau Eng Guang, who was appointed on 5th March 2021. The executive director and also the group chief executive officer is Mr. Lau Ju Yong, which was appointed at March 31st, 2021. The third and also the current executive director, which previously served as a non-independent and non-executive director, is Mr. Lau Ju Pen. He was appointed on January 30, 2015. And the last board of directors of Comfort Glove BERHAD is Mr. Ku Chi Yuan, which is appointed on January 7, 2021 as the independent non-executive director.
KOSSAN Rubber Industries Sdn Bhd was established in 1979 with its initial business involved in the manufacturing of technical rubber products. KOSSAN then ventured into manufacturing in 1989 with the establishment of their first factory in Kelang, Selangor. KOSSAN has grown into one of the largest manufacturers of disposable glove in the world and one of the largest technical rubber product manufacturers in Malaysia, with a broad-based market reach globally. Next is the company profile for KOSSAN Rubber Industry. So first we have Tan Sri Datuk Lim. He was the director or chief executive officer, non-independent executive director. He was appointed to the board of 14th June 1979. Second, the chairman of the board, independent non-executive director, has been held by Muhammad Shafi'i bin Abdul Ghafur. So Encik Muhammad Shafi'i was appointed to the board on 23 January 2017. Third, we have Lee Chu Hock, has held the position of senior independent non-executive director in KOSSAN. And last but not least is independent non-executive director in KOSSAN, which is Ho Kim Huat. So Madam Ho was appointed to the board on 23 January 2017.
The graph shows the current ratio for three different companies: FGV Holding BERHAD, Comfort Glove BERHAD, and KOSSAN Rubber Industries BERHAD over 3 years, 2021, 2022, and 2023. FGV Holding BERHAD, the current ratio has decreased slightly each year, starting at 1.22 in 2021, dropping to 1.17 in 2022, and remaining at 1.17 in 2023. This indicates a minor decrease in liquidity or in the company's ability to cover short-term obligation. For Comfort Glove BERHAD, this company shows a decrease in its current ratio from 6.02 in 2021 to 2.6 in 2022, then a slight increase to 6.06 in 2023. The sharp drop in 2022 followed by a recovery such as significant changes in the company's asset or liabilities over these years. KOSSAN Rubber Industry BERHAD, this company has hybrids and extremely high current ratio of 13.1 in 2021, which then decreased to 10.03 in 2022 and drops further to 3.52 in
That's all from us. Thank you.
2023. While still above typical industry average, this declining trend could reflect a substantial change in the company's financial health or strategy. Overall, the data points to varying liquidity trends among this company with notable fluctuations, particularly in Comfort Glove BERHAD and KOSSAN Rubber Industry BERHAD, suggesting dynamic changes in their operational or financial management strategies over the observed period. The graph shows the current ratio for three different companies: FGV Holding BERHAD, Comfort Glove BERHAD, and KOSSAN Rubber Industries BERHAD over 3 years, 2021, 2022, and 2023. FGV Holding BERHAD, the current ratio has decreased slightly each year, starting at 1.22 in 2021, dropping to 1.17 in 2022, and remaining at 1.17 in 2023. This indicates a minor decrease in liquidity or in the company's ability to cover short-term obligation. For Comfort Glove BERHAD, this company shows a decrease in its current ratio from 6.02 in 2021 to 2.6 in 2022, then a slight increase to 6.06 in 2023. The sharp drop in 2022 followed by a recovery suggests significant changes in the company's asset or liabilities over these years. KOSSAN Rubber Industry BERHAD, this company has hybrids and extremely high current ratio of 13.1 in 2021, which then decreased to 10.03 in 2022 and drops further to 3.52 in 2023. While still above typical industry average, this declining trend could reflect a substantial change in the company's financial health or strategy. Overall, the data points to varying liquidity trends among this company, with notable fluctuations, particularly in Comfort Glove BERHAD and KOSSAN Rubber Industry BERHAD, suggesting dynamic changes in their operational or financial management strategies over the observed period. The debt ratio is a financial ratio that measures the proportion of a company's total liabilities to its total assets, indicating how much of the company's assets are financed by debt. FGV Holding BERHAD, this company's debt ratio shows a slight decrease over the years. It started at 59.98% in 2021, declines to 56.46% in 2022, and slightly decreased again to 56.13% in 2023. Despite the decrease, more than half of the company's assets are financed by debt, which suggests a relative high leverage. For Comfort Glove BERHAD has a significantly lower debt ratio compared to FGV Holding BERHAD, which decreased drastically from 26.01% in 2021 to 9.95% in 2022, and slightly down again to 9.79% in 2023. This indicates a strong reduction in reliance on debt financing over these years, enhancing the company's financial stability. KOSSAN Rubber's debt ratio is initially at 8.07% in 2021, increased slightly to 9.92% in 2022, and then shows a moderate rise to 20.07% in 2023. The low figures in the earlier shows minimal reliance on debt, but the sharp increase in 2023 suggests a significant change in financing strategy or a possible expansion or acquisition requiring more debt. Overall, these debt ratios provide insight into the financial structure and risk of each company. FGV Holding Berhad maintains a relative high but slightly decreasing debt load, indicating a gradual move toward reducing its debt independence. Comfort Glove Berhad shows a very healthy trend towards lessening debt usage drastically, which could be due to paying off debt or accumulating more assets without additional borrowing. And KOSSAN Rubber, on the other hand, shows an increasing trend in 2023, which might indicate new investment or the financial strategies involving increasing debt. The time interest earning ratio is a measure of a company's ability to meet its debt obligation, calculated by dividing earnings before interest and tax (EBIT) by interest expenses. A higher ratio indicates a greater ability to cover interest payment. KOSSAN Rubber industry exhibit a very tight ratio of 133.82 in 2021, indicating a strong capability to meet its interest obligation. However, there was a significant drop to 50.2 in 2022 and further to 1.2 in 2023. This trend indicates a sharp decline in earnings relative to interest expenses, greatly reducing the company's ability to cover interest payment from its earnings. For Comfort Glove Berhad, this company had negative tie ratio in 2021 and 2022 with a value of negative 4.3 and negative 3.37 respectively, suggesting that the company had more interest expenses than earnings, thereby indicating financial distress in terms of covering interest payments. There was a recovery in 2023 to a positive ratio of 4.37, showing improvement in its earning relative to interest expenses. And for FGV Holding Berhad, started low at 0.52 in 2021, but show improvement over the years, rising to 3.1 in 2022 and further to 3.3 in 2023. Although these ratios are relatively low, the positive trends indicate improving profitability or decreasing interest expenses, enhancing the company's ability to meet its interest obligation. Overall, KOSSAN Rubber Industry Berhad start with a very strong ability to cover interest payments, but has seen a dramatic decrease, indicating worsening financial health in this aspect. Comfort Glove Berhad has shown recovery from a negative situation, suggesting a potential turnaround, and FGV Holding Berhad, while not reaching high levels, has shown consistent improvement over the period, suggesting better management of earnings or interest expenses.
So next is activity ratio. What is activity ratio? Activity ratio is a type of financial metric that indicates how effectively a company is leveraging the asset on its balance sheet to generate revenue and cash. The average collection period, it refers to the time taken on average for the company to receive payment from client or customer. The average collection period must be monitored to ensure a company has enough cash available to take care of near-term financial responsibility. So according to the graph, FGV Holding Berhad, the reasonable steady collection period demonstrate consistent collection technique and consumer payment habit over the past 3 years. FGV Holding Berhad, the relatively stable collection period reflect consistent collection procedures and consumer payment behavior over last 3 years. KOSSAN rubber industry Berhad, the longer collection might suggest problem with reasonable management or change in client payment pattern. Next, total asset turnover. So total asset turnover is used as a measure of a firm's ability to manage all its resources invested to generate sales. A higher ratio is preferred as it indicates better efficiency in managing the resources or the management control over its investment in asset. So according to the graph, FGV Holding Berhad's asset utilization has been declined over time, showing a reduction in how effectively its assets are used to create revenue. Comfort Glove Berhad's efficiency decreased in 2022 but improved somewhat in 2023, showing a rebound in asset utilization, while KOSSAN Rubber Industry Berhad has made considerable improvement in asset nobility in 2023 when it reached the higher ratio among the three firms. Next ratio is a profitability ratio. It measures the relative success of the firm that used its asset to make profit. This is a combined effect of liquidity, activity, and leverage management on the firm's overall operating result. This ratio also indicate the company's efficiency in controlling costs and pricing policy. A higher ratio is preferred as it tends to satisfy and meet the expectation of all parties involved in the firm's operation that include the management teams, employees, creditor, and stockholder. Under this ratio, we have net profit margin. It is measured the after-tax profit per ringgit of sale. Net profit ratio is not useful for companies making losses because they do not have profit. This ratio also indicates the pricing strategy adopted by a firm. The higher ratio is better, as it indicates the higher ability of the firm to obtain profit for distribution to the equity holders and internal sources of financing to support normal growth. So according to the graph, FGV Holding Berhad showed consistent improvement in net profit margin from 2021 to 2023. Comfort Glove Berhad from profit in 2021 to losses in 2022 and 2023, while KOSSAN Rubber Industry Berhad experienced a significant decline in net profit margin from 2021 to 2023. Next is ROA, or return on asset, is also known as return on investment, ROI. It measures the overall effectiveness of management in generating profit with its available asset. The higher the return on asset, the more efficient in its asset utilization. So according to the graph, FGV showed consistent improvement in ROE from 2021 to 2022 with a slight decrease in 2023 but still better than 2021. For Comfort Glove Berhad show a big drop in ROE from high profit in 2021 to losses in 2022 and 2023, while KOSSAN Rubber Industry Berhad show an increase in ROE from 2021 to 2022 but decreased in 2023.
Lastly, we are going to look into market ratio analysis. Okay, what is a market ratio? Market ratio basically measure and analyze stock prices and compare market prices with competitors and against other facts and figures. So these ratios track the financial performance of public companies to understand their positions in the market. So in this analysis, we are going to look into two ratios, which are dividend payout ratios, and the second one is price earning ratio. Okay, dividend payout ratios indicate that the amount of current earnings available to common stockholders pay out as dividend. So the formula for dividend payout ratios is dividend per share divided by earning per share. For price earning ratio, indicates that the investor preference of the company's shares with respect to the earnings available. So the formula for price earning ratio is market price per share divided by earning per share. This is the results from our analysis of dividend payout ratios. Okay, the highest dividend payout ratios will indicate that the company had well earning support the dividend payment. As we can see in the graph, FGV Holding Berhad had the highest dividend payout ratios in 2033, which is RM3.93. For Comfort Glass Berhad, the highest one is in 2031, which is 10 cents. And for KOSSAN Rubber Industry, the highest dividend payout ratio is in 2033, which is RM4.30. To compare with all the three companies, FGV Holding Berhad had a significant downward trend in dividend payments from 2021 to 2033. For Comfort Glass Berhad, they have no dividends in 2031 and suffered losses in 2032. But in 2023, only had to pay very low dividends. And lastly, for KOSSAN Rubber Industries, there is a significant downward trend of dividend payments from 2021 to 2023. Lastly, this is the results of price earning ratio analysis. Okay, a high price earning ratio means that the stock's price is high relative to earnings and possibly overvalued compared to low ratio. Okay, low ratio indicate that the current stock price is low relative to earnings. As we can see in the graph, for FGV Holding Berhad, the highest price earning ratio is in 2033, which is 0.45 times, while the lowest one is in 2032, which is 0.035 times. For Comfort Glass Berhad, the highest price earning ratio is 0.22 times, which is in 2033, and the lowest one is in 2032, which is 0.08 times. And lastly, for KOSSAN Rubber Industry, the highest price earning ratio is 4.52 times, which is in 2031, and the lowest one is in 2033, which is 0.02 times. To compare with all of the three companies, FGV Holding and also Comfort Glass Berhad show a decline or decrease in price earning ratios from 2031 to 2032, but have a slight increase in year 2033. And lastly, KOSSAN Rubber Industries show a significant decline of price earning ratios from 2031 to 2033, which indicates a substantial decline in investor confidence in the company's future performance. For the conclusion, a more complete view of a company's operational health can be obtained through ratio analysis, which makes its essentials. There are numerous applications of ratio analysis. For example, ratio analysis can be used to examine changes made to a company over time to gain a deeper understanding of the directions of the company's operations. Apart from that, ratio analysis also can also be utilized to compare with other similar firms. Management can use the data to make decisions to strengthen the company positions in the market.